Welcome out to another Trading Justice podcast. This is Mark Justice, joined with my brother Matt, where we are going to break down really interesting is one word, hectic is another word, complicated is another word. Whatever adjective you want to describe the markets, we're going to break it all down. We're naturally going to talk about the war, a plethora of information coming into the week. Going to break all that down. We've got some really interesting videos to play, including one by Larry Fink, where he talks about some dual outcomes on oil. It's going to be a really interesting conversation. Going to break down gold, the technicals from Matt, and then we're going to teach 5 ways to mitigate damage in volatile market conditions. A very practical conversation to end the podcast. But this podcast is brought to you by Tackle Trading. Tackle Trading is an amazing community that my brother started many years ago, helping traders learn about trading, helping traders navigate all kinds of market conditions. And Matt, you've done a fantastic job leading the community through these market conditions. How are you doing this weekend, brother?
Doing absolutely fantastic. Excited to be here for another edition of the Trading Justice podcast, and looking forward to an awesome conversation here with you, my friend. And if you're looking for an amazing trading community, call home that's going to help you navigate the financial world, both from an application and an educational perspective. We like to think both of them equal success at Tackle Trading. You can hit that link in the description underneath this video, and you can join Tackle Trading and test out everything we do at Tackle Trading: the traders lounges, the coaches shows, the cash flow clubs, the mastermind groups, and yes, the absolute greatest newsletter in the entire marketplace. You want to be a technical wizard? Read the technical update in the newsletter. You want to understand the economic landscape? Read the economic article in the newsletter. You want to understand what's happening with commodities and the global markets? Read the global markets article in the newsletter. You don't want to read anything? Watch the 3 videos in the newsletter. It is literally the best newsletter in the business. It will help you understand everything that's going on in the market, and it will absolutely get you ready to rock and roll going into next week as well. And so all of that comes with that pro membership. So definitely check that out.
Matt, there was a lot of news over the last week regarding the war. Continues to be front and center in the markets. And before we talk about the technicals, we started the week with a potential deadline, right? A potential deadline for the attack of power infrastructure. Trump rescinded that on Monday morning, and then we got our 4th consecutive early week rally into the falling 9 EMA, which then got snuffed out. You joked for like 6 months that it was Groundhog Days on the technical. It's kind of been like Groundhog Week the last 4 weeks. Rally at the start of the week, sell off at the end, on cue, 4 straight weeks. I mean, you've pointed out this market behavior. It's been pretty consistent, hasn't it?
Yeah, and as the market's caught on to that market behavior, it forms patterns in the market, and people like me anchor on patterns. And as those patterns show up early in the week, midweek, well, obviously we get a little excited as traders coming into the end of the week, because you're absolutely right, Mark. The technical side is telling a story. And I keep saying this over the last 4 weeks. People are describing this as crazy, as volatile, as uncertainty, and it's not that I disagree with any one of those. I don't. I think you could easily describe the current market condition as crazy. I think you could easily describe it as volatile. I think you could easily use the term uncertainty. I certainly have many times in the last 4 weeks. In fact, we don't get this downward pressure in price unless there's a little bit of craziness, a little bit of uncertainty, and a little bit of volatility. So I'm not trying to suggest that those terms are not accurate descriptions for what's happening in the market, but I've also stated, and I've been very clear on this. There's a technical logic here as well, and oftentimes in a market, regardless of the volatility, there's going to be patterns that develop in that market, and the pattern that has developed over the last 4 consecutive weeks has been very consistent. Up on Monday, hit the 9 EMA, rotate on Tuesday and Wednesday, and see downward pressure in price on Thursday and Friday. It's very consistent in a short-term bear market utilizing the 9 EMA. And so when you look at the price action, you see it for 4 consecutive weeks. Up on Monday, hit the 90 EMA, slow its momentum at the 90 EMA, downward throughout the rest of the week. Up on Monday, hit the 90 EMA, down the rest of the week. Up on Monday, hit the 90 EMA, down the rest of the week. Last week, it doesn't, and we could debate the nonsensical Monday morning tweet with the obvious insider trading that was happening 10 minutes before that tweet that went out on Monday morning to alleviate the condition. But Mark, even that tweet that was basically an alleviation was just a 5 minute pump that hit the 90 EMA and rolled back over the rest of the week. And so the market is obviously looking at the situation saying, until we get an answer on one of the most important questions out there. How long is this going to be impactful in the financial world? How long is this quote unquote war going on? How long is it going to impact the market? And until the market gets some degree of resolution on that, patterns play and probability wins out.
Yeah, no, absolutely. And, towards the end of the week, Trump extended the deadline to April 6th before attacking power plants and
Mhm.
civilian infrastructure. And, I think there was some hope that extending the deadline would kind of call markets, right? Let's extend the deadline. Let's give, negotiations, which were floated numerous times last week, a 15-point plan. Iran rejecting that, Iran putting their own bullet points out.
They can't be
But
further apart on those plans, by the way.
yeah, and we'll talk a little bit about that. But Matt, I think, perhaps the biggest catalyst of the week was unintended. We got
I do too.
video. We got a video by Trump in which I do not think there is any way. Love Trump, hate him, in between. I don't think there is any way to say that this wasn't a tactical mistake on Trump's mark from a market point of view. Let's play the video.
And frankly, I thought the oil prices would go up more, and I thought the stock market would go down more. It hasn't been nearly as severe as I thought. I think they have confidence in maybe the American president and maybe the people sitting around this table.
Yeah, and I could go off for the rest of the podcast on discussing this from a market. Let me sum it up. Trump, ever since you said that, the market went straight down almost on a tick by tick basis with almost zero reprieve. You cannot tell markets that I have a high pain threshold or a higher pain
It
threshold.
was a terrible message.
Like if you are the chairman, if you are Jay Powell or Kevin Warsh, the next, we'll see if he gets confirmed. He will, but or if you're Janet Yellen, or if you're Joe Biden, or you're Donald Trump, you cannot tell markets, oh, I thought a policy that you are uncomfortable with or have uncertainty would cause even more damage. You tell markets that, guess what? They're going to go find your pain threshold. They're going to go find.
It is, and that's exactly what transpired here, Mark. I was watching it in the moment. I was day trading in the moment, and I'm going to tell you right now, the very second he said, I thought it would be worse, the market said, hold my beer,
Hold
and
my beer.
I'm going to test we're going to test that thesis. Market pivoted, went straight down, and it's been in a consistent intraday bearish downtrend ever since that. Because if the president is coming out and saying, "Oh, I was expecting more pain than what we're seeing," and obviously he was trying to say it from a political perspective, trying to. I don't want to like get into the mind here, but it sounded to me like he was trying to alleviate criticism in the short term from a political perspective. And yet the market was listening to that. And the market turned and said, okay, well, if we haven't found your pain threshold yet, that obviously means that there's other things transpiring here. And so market pivoted and market has not caught a bid ever since, quite frankly.
Yeah, and so much about the psychology of Trump and markets, and there will be.
And before you get into that, between Pam Bondi and her absolutely ridiculous 50,000 comment from 4 weeks ago, which again was the high point of the
She
market so
literally
far.
ticked the top.
Pam Bondi ticked. She's the bag holder at the very, very tippity top of the 50K level. Like, thanks, Pam Bondi, for that nonsense. And then just the political message coming out late last week, which sent the market in a spiral, in my opinion, was, hey, while the market's kind of hesitating and saying, will they, won't they, is it going to escalate? Is it not going to escalate? The message comes out as, I was expecting more pain. The market's going to say, okay, let's price in more pain.
Yeah, it's that simple.
I don't think it's more complicated.
It is not more complicated than that, and so much of the psychology of Trump and the markets, especially in his second terms, has been, oh, Trump has a pain threshold, and markets attempting to find that to reverse policy, to reverse. And when
Well,
Trump
finish your thought.
yeah, and when Trump says, I thought it'd be worse, he is telling the markets his pain threshold is much worse.
There's more.
Terrible message
Which means at the
from
current
just a market.
pricing, this isn't painful.
Yeah,
At the
a
current
terrible
price.
message for no upside other than,
I thought it was a ridiculous message.
like there's no upside in that. To be honest, was a rookie
Other
move.
than look at me type stuff, but like and not only that, Mark, but the market itself is getting really sick of the gaslighting on the
Oh, Trump
like
has lost his ability to
yeah.
jump on, because and I'll be honest,
Well, look at the price response 2 days after the latest jawboning of the market. Market has its biggest sell-off it's had in the entire saga. When we were dealing with slowing momentum coming into the week, now we're dealing with increasing momentum as we finish the week. If your message this week was we're going to alleviate on Monday so that the market can get in a little bit of more stabilization, whatever you tried to do on Monday, you ripped apart on Wednesday and Thursday and just basically said it's going to be worse than what we anticipated. The market said, okay, well, we don't want to hold going into the weekend then.
because Trump for 3 straight weeks has floated out, the war is going to be short, it's going to be over soon, we've achieved victory, kind of this continue, and he was like, patting himself on the back this week with that video that we played, that, hey, the
But
plaintiffs,
the conflict's obviously not over. We've seen the conflict escalate. And over the weekend, there was a tremendous amount of effort on some of the right-wing media to start putting out commentary regarding getting America ready for ground troops.
yeah,
And
no,
so on
and
one side of the equation, you have we've won the war already. We've achieved all of our military objectives. On the other hand, it's like, but I thought the market would be far worse given the fact that we're doing all of this. And then on the other hand, they're talking about sending more ground, starting to put out into the market the philosophy that there's going to be limited ground troops here. And so it's very mixed messaging. And I feel like the market's just getting a little bit sick of the jawboning.
yeah, no, you
Or
can't.
maybe I'm getting a little sick of the
No, I
jawboning
think
and
the market.
I'm projecting a little bit,
I
but
think the market has. I think the ball is no longer in Trump's court as far as his
he
ability
can
to
talk
job
up
on.
the market.
Oh,
Not when for 2 weeks he's been talking up the market and then he let the cat out of the bag last week saying, "Well, I actually thought it would be far worse than this."
and now,
It was a bad message.
and in fact, he's trying to have his cake to eat it too, and the market's not having any of it anymore. And you mentioned that right wing commentary, because one of the questions now as we move forward
hmm
is, as it has been for 4 weeks, right? We're starting our fifth week this week. Is how long of conflict is this? It has huge ramifications on the price of oil, and we'll talk about that here in a little bit. But in trying to read the tea leaves, some
hmm
of that commentary, what is the next stage of escalation? Trump tried to make it about, the attack of civilian infrastructure, but there's also the boots on the ground. The U.S. Tripoli with about 2,500 Marines arrived in the Middle East. We've had more and more troops
Faster than scheduled, by the way.
arrive in the region. The Washington Post has suggested that the Pentagon is preparing for weeks of ground operations. Right? This will be viewed, not as a de-escalation. This will not be viewed as a pause. Troops on the ground will be viewed as a major escalation and strike fears of a more prolonged conflict. And increasing the chances that this happen is you do not send out messengers like Mark Levin. And we have a video
Mhm.
from Mark Levin basically setting the stage for the base of Donald Trump to prepare mentally for ground troops on the ground. Let's play that video now.
Well, and before we play the video, just I find it like that's obviously one of the most important questions for the market itself is Are we going to see escalation? Are we going to see de-escalation? And ultimately, escalation at this point, isn't it boots on the ground? Like they've sent B-2 stealth bombers in. They've been running bombing campaigns for weeks and weeks and weeks. Doesn't escalation have to be boots on the ground or hitting energy infrastructure at
It's
this
one of the
point?
two. It's one of the two, right?
And so we know the deadline on the energy infrastructure. It's 10 days, right? That's the deadline on the energy infrastructure. That's got pushed back twice. And now it's a matter of will he or won't he put boots on the ground? And to me, those boots on the ground is a lot about Carg Island. Would you agree with that?
Yes, absolutely.
Okay. All right. So I just kind of feel like there was an important moment, and we don't talk like politics a lot on the Trading Justice podcast, but obviously this is an environment where politics, economics, and markets and geopolitics have kind of
This is a
intertwined.
poster child for when
Yeah,
these subjects
intertwined a
intertwine.
little. And so there was a moment that the president just yesterday put out a post on True Social that suggested everybody watch Mark Levin tonight. And Mark Levin had a specific message that he wanted to get out to the base. And so I kind of feel like it's market relevant because it kind of helps us answer the ultimate question. Are we going to see escalation or are we going to see de-escalation? And I just wanted to add that very quickly.
All right, let's play the video.
The president has to, people are bringing information to him, and he has to worry about all these things. Now, one other thing. Troops on the ground. He said no troops on the ground. I don't remember that in any campaign speech either. But why would we need troops on the ground? Well, there's a lot of reasons, and we wouldn't need 300,000 of them.
That's
It's
the
this
reference of
uranium,
Iraq,
too.
basically.
We've got to get the uranium. If it cannot be destroyed, if it cannot be altered, we got to get it. For the reason I just said. You can make dirty bombs, and over time you can still make sophisticated missiles. So you need to get to the uranium. That's why I'm reading in the paper, we're talking about the 82nd Airborne, we're talking about these various special forces and the various
I think we got upwards
military
of 10,000
services and
troops
so
right now.
forth. He's not talking about sending regular
Marines
army
airborne.
and infantry in by the hundreds of thousands. The men he's talking about, the units he's talking about, they are specialized. And you know what else? I remember from my days in the Reagan administration. Many of them are trained for a moment like this to try and secure enriched uranium. Many have been trained for moments like this. I guess what I'm trying to say is we are in good hands. No, not with Allstate, but with President Trump. Because he's a man with enormous intelligence, enormous common sense.
So the message is out. Prepare for tactical forces at a minimum to be. Yeah,
Yeah.
like if you can read into that any other, here's a paid spokesman for the administration. That's what Mark Levin is. And he has the message. Trump said, "Deliver this message."
Well,
I
and with
think,
Trump specifically coming out on that post and saying "Watch Mark Levin
yeah,
tonight," like it kind of felt like there was a specific message for a specific reason, and it certainly felt like the president was trying to, establish a message here going out to the base that, hey, listen, we're not doing a full scale invasion like we did in Iraq, so it's not a never ending war type situation. Like there was no promise made on the trail that it was going to be, no boots on the ground. But I kind of feel like no new wars kind of equates to no boots on the
yeah.
ground.
I
Like I
know
kind of feel
several
like that.
conservative friends who
Yeah,
would
kind of feel
disagree.
like that's not gonna play that well. But to me, 10,000 troops in Carg Island is boots on the ground, and I'm certain most people will feel that way as well. And so
And Matt, at some
I
point,
don't know how you don't see that as escalation. And I just want to make one point here. This war does not end until number one, there is an agreement between Iran and the United States. And this war will not end as long as Iran does not agree to these three things. Number one, no nukes. There cannot be nukes. That uranium that Levin talks about, is part of the entire equation. You cannot start this. I don't care. You want to criticize the reasons, the logic, the build up, the lead in, the ultimate decision to start this. That's one thing. But now that it's started, can we both agree that you can't end it without getting the uranium?
No, you can't. You can't. You have to get the uranium. Like there's
Okay.
been much, like just let me comment on this. There's been a lot since the start. I think the administration did a terrible job at the start of the war outlining what they actually were attempting to achieve. Right? It was very vague. It was changing. The goalposts changed,
Mhm.
but it has kind of coalesced, especially in recent weeks. If you don't get the uranium, that's the goalposts they've set. Right?
I think it boils down to three things, Mark. Like the messaging has been mixed and terrible. I agree with that. But I think it really boils down to three things. Number one, no nukes. And that means the US or international agencies get control of the uranium. Number two, there can't be proxies. We can't live in a world where the West has to be concerned about Iranian proxies being supported by Iran and encouraged to attack Western facilities, Western allies, Western way of life. If we're going to fight this war, you got to have a conclusion where you can't have Iran have proxy wars nonstop. Iran for 2 decades really didn't do much, but they had Hezbollah, they had Hamas, they had the Houthis. You got to defund the proxies out of Iran. And third, you have to have a reduction of the ballistic missile program. Those are the three things that have to occur, in my opinion, for the U.S. to be able to walk away from this as in a winning scenario. And those three things can be achieved either through one, military escalation, or two, negotiation. And some of it, that's where I'm kind of at. Do I think that Mark 11 is trying to get a message out there? Absolutely. Do I feel like it's being supported by the president? Absolutely. Do I feel like we're sending 10,000 troops to the Middle East as a way to prepare for an invasion of Karg Island and maybe some of the other islands in the sea to control that Iranian oil and to really kind of have leverage over the Iranian economy and force Iran to come to the negotiation table a little bit? Absolutely. But could it also be a massive, massive leverage play? It could be that as well. But at the end of the day, I just don't think this war concludes in a manner that is acceptable to the United States of America if we don't achieve those three things: no nukes, no proxies, and a reduction of the ballistic missile program. And so I don't even think this is about regime change anymore. I'm not
No,
even sure it was ever about regime change. I think Trump has embraced the Mar-a-Lago approach of we don't care what regime you have. We just need to make sure that we have people that are willing to do business with the United States of America. That's what they did in Syria. That's what they did in Venezuela. And that's what they attempted to do early on in Iran. One of the problems was they killed a lot of those downstream individuals, but that's what I think the ultimate plan is. And as long as the ultimate plan allows a negotiated settlement with no nukes, no proxies, and a reduction of the ballistic missile system that would, not threaten the entire Middle East constantly, I think that's where the U.S. wants to go. And is this ultimately a massive, massive leverage play that Trump doesn't have any intention of putting boots on the ground? Or is he legitimately getting everything ready to have 10,000 troops going to Karg Island and try to control some of the coast of Iran? That is escalation, and that I don't know if we'll see this week, but it's obviously the next step in this saga is this leverage? Is this real? Where's the negotiation set forth? And I think the market told us on Thursday and Friday, we don't know if it's real or not, but right now we don't trust the situation.
yeah, no, absolutely. And you've correctly identified, the path forward. U.S. has their objectives. Will it be achieve those objectives through escalation, which obviously the market isn't going to like at all? Is it going to be done through peace talks, which the market would like quite a bit. This
Well,
weekend,
one way
Matt.
or the other, Mark, listen, it's going to be very, very difficult. Mark Levin talked about how that we are trained to do these things. And yes, you watch what the military did in Venezuela. There's not a military in the history of mankind that could have pulled that off. And yet there is America doing it it's just so impressive what we can do there. But it's a different beast in Iran. It just is. And the market's obviously a little concerned about it right now.
Yeah, and there's several countries are meeting in Pakistan this weekend. I think the foreign ministers of Pakistan, Turkey, Egypt, and Saudi Arabia trying to set the groundwork. Iran actually allowed 20 Pakistani flagships to pass through the Strait of Hormuz
I think that's
unharmed.
30 this week total.
Yeah, and so they've allowed more traffic. They haven't signaled openly that they are really in the mood to talk, and we'll see. How and really so much of a this was one of the thoughts I had as the week came to a conclusion. Because I think part of my mindset over the last months has been, well, what does Trump want to do? That has shifted internally in my own mind, and I think in the mind of a lot of others, that it's no longer what Trump wants to do, it's what Iran wants to do or is willing to do.
You got to have
Right.
two. You got to have two people dance the tango here, Chucky.
And so the markets, in the short and intermediate term, really are, I think, directed by Iran. And there was an interesting gentleman on Face the Nation on Sunday morning, who was talking about maybe the Iranian state of mind when it comes to negotiations. Do you have that video, Matt? There we go.
What we hear from the White House and from Israel is that pressure will break them. You're saying they're unbreakable?
At the moment, and this could change in the future, but we haven't seen any cracks in the regime's resolve. We haven't seen any cracks in the cohesion of its security forces. And given the fact that so many of its top officials, including the supreme leader, have been killed, it's a regime which is not prepared to compromise or change its ideology. They actually believe that antipathy towards America is part of their identity. And if you capitulate on that, it actually doesn't prolong your shelf life. It actually could hasten your death.
So if there's not a negotiated settlement, how does this end?
I don't see any possibility of a resolution to this conflict. I think the US and Iran are miles apart when it comes to their goals here. Now, I think we could see a potential ceasefire that opens the Strait of Hormuz, which would shift this back from a hot war back to a cold war. But there's no possibility, in my view, so long as this regime is in power, of a US-Iran normalization.
That message wasn't going to get put on the bullish bullet boards.
No, but I've been hearing more and more of that throughout the week. That wasn't just that interview on Face the Nation today. I've been hearing more and more that Iran is, very, very, foot to the ground, and they're not willing to come off their position right now. And when you look at kind of the 15-point plan versus Iran's 5-point plan, they are worlds apart right now. Worlds apart right now. And when I look at some of our goals in that 15-point plan, they're getting harsher over time. Like 2 weeks ago, they were talking about less harsh restrictions. Now they're more harsh. When you talk about Iran's response through Pakistan this week, it was basically, America, you got to get out of all of your bases in the Middle East. You got to go back to the United States. You can never leave the United States, and you have to pay us a lot of money in reparations. Obviously, Iran's like looking at the America's 15-point plan is like, oh, thank you, no thank you. And America's looking at Iran saying, hey, go back to America, leave all your bases. Like when those are the parameters of the negotiation, yeah, I can understand why this dude goes on Face the Nation and says, I don't see the ability to have a negotiated settlement here. And I would agree right now, and I think the market agrees with that, or we want to see a continuation of escalation to the downside on the volatility side. But can't those things change very quickly?
They can.
Like those dynamics right now, I'm not saying that this gentleman is not extremely, informed. He is, but I'm just saying those dynamics can change. That's why one of the reasons the president is putting 10,000 troops in the Middle East and putting all the threats on Karg and the energy infrastructure is to try to get Iran off their negotiations, or at least have some sense of negotiations right now. But I I I don't think this thing ends until a negotiated settlement. I think we could all agree on that. It's just a matter of, does Iran have the pressure necessary to put them in a position to do that? And right now, no.
Yeah, no, and
You cannot win this war alone from the air. Is I think the general underlying philosophy that we are seeing play out right now. And that's where I think Israel was a little bit inaccurate on the intel coming into this war, was that we're going to put maximum pressure on the air. We're going to take out all the military institutions. We're going to hit all the missile launchers. We're going to take out the missiles, and the Iranian people are going to step up, and they're going to be the boots on the ground that are going to carry us to the end conclusion. We haven't seen that play out yet, and there's never been a military war won solely in the air. Ask Germany in World War II when they tried to do that to the UK.
excellent historical example. Excellent historical example. And let's go look at the crude oil chart here, Matt, because one of the things, the longer that so much about the short-term price action over the last 4 weeks for me has been about, okay, headline roulette. Basic. We've been in an extreme headline-driven market, but you've started to see, some of the chatter of the extreme outcomes start to be discussed in the market. Right, higher oil for longer, the type of destruction that or maybe destruction is a little too graphic of a word, but hindrance, the weight on economic growth itself. I talked about global PMI numbers in the newsletter this weekend, how we are starting to see the impact of the war on global PMIs.
Slight.
You know,
European PMIs have lived underneath 50 for a long time, and they were kind of right there. So I get the point. We did see a slight reduction in PMIs across the board, but I wouldn't say they're screaming recession yet.
Yeah, no, and Larry Fink, was talking about, the extreme outcomes, because this has been one of the more tactically difficult markets to navigate because of the headline, so much headline risk, so many big things. And Larry Fink was talking about, and I thought in a very practical, pragmatic conversation of, there's a lot, depending on how those headlines break in the coming weeks, there's a wide gap in potential outcomes here. Let's play the video.
A year from now, oil at $40 a barrel. Market see it above $150 a barrel. Well, we have two very extreme outcomes. And in my conversations throughout the world with the U.S. government, all that, to me, everybody has to recognize there's not going to be an outcome that's somewhere in the middle. It's going to either be two extremes. Is Iran a country that can be accepted by the international community? Can Iran be a country that participates in the world again? And if that outcome occurred, then you could have the Iranian oil back into the marketplace, alongside the growth of the Venezuelan oil, and you could paint a picture where oil prices could be lower than they were prior to the Iranian war. If there's a cessation of war, and yet Iran remains a threat to trade, a threat to the Straits of Hormuz, then I would argue that we could have years of above $100, closer to $150 oil.
What happens to the global economy if that happens? How do we see it?
We'll have global recession.
The US is essentially energy independent.
Escalation unlike we've ever seen in the world history if that occurs.
Maximize their energy resources, including their oil and gas reserves.
You need to use what you have to provide more abundance in your country. In the UK, you have some solar, you have some wind, you do have hydrocarbons.
I thought Larry Fink was, I thought it was a really pragmatic, just matter of fact video. One of the things that stood out to me on that, Matt, was the fact that, he was projecting a year out, not just, a week out, not just a month out, but if the outcome isn't a joint, decision together, i.e. working with Iran, and I get your take on that, because of the complexities. Those high oil prices he was talking about were for April of 2027, not 2026. And if that occurs, global recession, was the outcome. What was your take on Fink's comments there?
I got a couple. Number one, he's not wrong. Uh, he was talking about two outcomes, right? Either one, we're at $150 a barrel and we're talking massive, massive global recession. And I'd double up on that. I'd say depression on that one. But or two, we're going to see a massive downward pressure in price based on, an Iranian agreement and the world accepting Iran at the business table, and you have on top of that Venezuela oil coming back into the market, and over time you'll see oil get underneath where it was before the Iranian situation. If that occurs, that we have a negotiated settlement and ultimately Iran and the US agree, I don't think Iran agrees to anything unless they do get some semblance of sanctions reduction, if not sanctions elimination, which is a sign of accepting them in the global economic world. And so if that occurs, yeah, you have Venezuela oil that's going to be hitting the market. You have a scenario where Iranian oil is going to be more accepted around the world and whatnot. And, in that best case scenario, yeah, it absolutely could see oil underneath where it started, the Iranian situation, 100%, because you'd be talking about not only Iran and an alleviation of the military concern that we have right now in Iran, but you would have, welcoming Iran to the world stage. Agreed, Larry Fink, I agree, but that's got to be a very low probability given the fact that who in the world trusts the Ayatollah? Yeah, I get it. We eliminated the father Ayatollah, but now the son, who is more of a hardliner, in from what we get told by the media, who knows, the media oftentimes has propaganda and outright lies in it, but we're told that this new Ayatollah is more of a hardliner. And you heard multiple videos. The gentleman on Face the Nation, including Larry Fink, said it as well. But you have a situation where in their DNA in this regime is to not work with the West, doesn't even want anything to do with the West. And so without I get the Mar-a-Lago approach in Venezuela and Syria. We're gonna have to wait and see the success out of Syria. It does look like Venezuela is going to be a success on that side of the equation. So can that model work with the current regime in Iran that for 40 years have basically stated death to America and used proxies against Western institutions during that 40 years, including killing thousands of Americans over time as well? It's a tough sell to the rest of the world to say we're going to do all of this, but we're going to stop short at regime change and with the current Iranian regime, we're going to welcome them into the world and the world's going to trust that. That's a tough sell, honestly. And so, but is there scenarios where you have a negotiated settlement and oil gets back down into the 65 range? Yeah. Do I think 40? No, I not without an economic depression do I think 40, but I get his point. On the flip side, if if we see true escalation here, we have not even sniffed the close to the top here in this oil chart. In fact, oil has been being held back for a variety of reasons. One was the artificial pump in the ES last Monday, but throughout the week, what happened? Back up right to that same level as the market grows into more concern. And so, as of right now, like without alleviation, without a negotiated settlement, like Larry Fink's right. I don't think there's a mid outcome here. I don't think there's an outcome where we just deal with oil between 100 and 120. Like I either one, there is big time escalation and we're dealing with oil at 150, or there is big time alleviation, we're dealing with oil at 70. But I do agree with Fink on the one side of the equation. I don't think there's a middle ground here.
Yeah, no, I mean, the plain and simple fact is it's a tricky environment, and military and politics will drive the next 5, 6, 7% move, right?
Yeah.
It's
Oh, yeah, well, in the ES, yeah,
yeah,
like
in the
in
yeah.
in oil, the next 30-point move, but
Yes, indeed. I just want to talk before we get to talking about some practical ways to
Mhm.
mitigate this environment. Just want to talk about gold real quick. Gold has got caught up in some of the volatility during this little stretch. Ended on an interesting candle to end the week, where you had a lot of risk assets puking, and gold didn't. That was the first time that had happened in a while. That kind of stood out. I know it's just one data point, but you start to look for these data points, and when that data point
but it's
happens at
one
a
data point in the backdrop of how many times has gold bottomed before the ES in a correction, Mark?
Yep. And
Almost
so
every single time.
that's just what I was going to get, like one data point. But when it happens at a support level, and when
Mhm.
gold's history in volatile, because how many times you've been trading about 20 plus years now, right? Over 20 years. I've almost been doing it 20 years. We've seen gold bottom before, get caught up in the volatility for whatever time period, right? Have a moment and then bottom before the markets, other risk assets do. And so it's just something that, stood out on Friday, something to pay attention to in the coming
Well, it
weeks.
reminds me of what Paul Rudd's character said in Anchorman to Will Ferrell's character. 60% of the time, it works every time. And he was talking about the perfume he wears. I'm talking about gold bottoming before the market. But I can't tell you the exact probability of how many times gold bottoms before the S&P 500, but it just feels like every time it does. And so I actually kind of felt like gold's pricing this week was very consistent, slowing momentum at the low point. There was a couple day trades on gold we broke down in the Traders Lounge this week that were literally knock your socks off good. And I think there's one of those setups going into next week as well. And that's the thing in that Traders Lounge, tackle trading every day for the pro members at 12 noon Eastern Standard Time every single day. We don't just talk about the news of the day. We don't just talk about the general technical levels and answer questions and talk trading. We break down intraday levels, and there were three specific trades this week that we broke down. One on gold above 4,500 that was a 100 point, just amazing trade, and then two on the ES on the downside on Thursday and Friday after Trump gave his message on Wednesday about market hasn't felt the pain that I thought it would. Well, market ripped the band-aid off. We caught two great shorts on the intraday side of the equation. And so one of those situations that coming into the lounge, yeah, we break down all the market activity every single day. We talk those daily levels, but we also talk a lot on the intraday side of the equation. So come join us every single day. We break it down.
Let's talk about some practical ways to mitigate damage in our portfolios for long-term holdings and so forth, and run through these. But Matt, I think we've done a really nice job for our community, kind of since the onset of the war, being like, this is a complex environment. I remember the first Thursday after the war started. So the war had been going on 5 days at the
Mhm.
time, which feels like 5 months ago.
It does feel like 5 months ago. It does.
I mean, this has been
It was
a
just like
bear.
this is going into week 5, and it feels like 5 months.
It just does. And anyone that's been trading in the last month can just is likely nodding their head right now. So
Mhm.
like it's been a really long month. But I remember you on the Traders Lounge that Thursday, you basically said like, listen, keep your powder dry. There's going to be easier markets to trade. There's going to
I've
be
had one
easier.
simple message in the Traders Lounge, and I say it every single day. Bulls, because most people are bulls.
Yeah, I am.
Bulls.
I
I'm a
am.
perma bull with the tactical bear, and most people in our community are bulls, and I would say most people in general are bulls. And what I keep telling to the bulls is something very simple: every single day, every single day, every single day, there's going to be a massively important buying opportunity coming out of this. But until the market gets above that 9 EMA, until the market breaks pattern, there is not a bullish conversation yet. And so you might want to have one getting prepared, have one getting prepared, but it's not there yet. And so I do think one of the things we do, quite frankly, extremely well, and you know me, Mark, I'm not one to pat ourselves on the back. But I do think one of the things we do extremely well is navigate these volatile, uncertain environments in market corrections. I remember navigating the, tariff-induced one last year. That became an intraday conversation. 1 hour time frames became dominant for us. We were able to offset not only that downward pressure in price, but be able to actually make money in that environment. Then caught the reversal. Uh, Great. Looking back, there were shaky times, there were crazy conversations, but I thought we navigated that one very well, and I do believe we're navigating this one fairly well as well.
Yeah, no, and along the way in that navigation, everybody's portfolio is a little bit different.
Mhm.
Some individuals have long-term holdings, things that they've held for years, just true long-term investments in their portfolios.
Well, and if you
Uh,
don't, you should use market corrections as an environment to start that.
I mean, I know that will be my mentality in the
Mhm.
coming days, weeks, months, whenever
Blood in the
technicals,
streets. Think about a buyer.
of course, that face the nation guy, it might be months instead of weeks.
I think he's wrong ultimately, personally. I understand the concern. I do,
It's
but
just my joke. It just was an easy joke. But
I
then,
would be
there's
very surprised if we're still enthralled in this war in 27.
I would hope so. I would hope not, right?
And
I would
maybe
hope
that's
not.
my hope, but yeah.
But there are just there are practical ways you learn as a trader to offset downward pressure, right? Market corrections happen. They're part of trading. If you've been trading for decades or years or however long, you've been through your set of market corrections, and they're just things that you learn from a best practice standpoint in in how to handle these situations. In how to handle these situations. And so Matt has prepared a list of 5 ways to mitigate downward pressure. And the first of these is just the good old fashioned covered call. The covered call is such an amazing weapon, in helping you with a variety of situations. Now, there's individuals such as myself who are basically self-identified covered call traders, whether it's Monday, Tuesday, Wednesday, March, April, May, all,
Rain, sun,
yeah,
doesn't
like,
matter. Fall, spring,
like,
winter, doesn't
give me a bull
matter.
market, give me a bear
Yeah,
market. I'll
yeah.
love to
Ride
sell my
those cover
covered
calls.
calls, no matter what. But there are other traders who will break out the covered call when it is tactically, appropriate to do so to help kind of mitigate some of that damage. Matt, you've been teaching covered calls for 20 years.
Mhm.
This is something that we've teached. How does the covered call really play into the environment we're in right now? And just talk about some of the, things. Let's just have a brother conversation on the covered call.
Honestly, when I was a young trader, and we'll talk about the protected put option here in a second, but when I was a young trader, that was the go-to strategy. Anytime you got concerned about a longer term investment, a position trade on the longer term is to get to buy a put option to offset risk. And that makes a lot of sense whenever we get concerned about life in general, whether it's, life insurance or whether it's car insurance or whether it's health insurance or whether it's, whatever it is. We buy insurance anytime we get a little bit nervous about the future. And so it works the same way in the financial world. But one of the things that occurs in those conditions as the market goes down is volatility explodes up. And as volatility goes up, it's forcing you to pay a high premium for those put options. And so it's one thing to buy put options when volatility is low and you're getting ready for the future of volatility, the future of concern. It's a different thing when the hurricane is on the doorstep and you're trying to buy hurricane insurance. If you're sitting in Florida and there's a hurricane forecast that the hurricane's going to hit the state of Florida in 12 hours, and you try to go buy hurricane insurance, if you can get it, it's going to be extremely expensive. Then the day after the hurricane hits, and you're like, "Ooh, can I buy hurricane insurance?" They're like, "Nope, damage done." Same concept here. And so if you're running to the market to buy insurance after the market's already went down, that's like buying hurricane insurance after the hurricane already hit. Number one, you're going to still pay a hefty premium, and what are you trying to protect? And so there's a variety of different ways that traders can shift their focus during market corrections. But once you are in an ABC cycle, and that's how I navigate market corrections, that's how we navigate it on the technical side of the equation. But once you're in a market correction and you have embraced that as the philosophy, You don't want to stare at the daily chart trying to pump that latest, greatest swing trade on the bull side of the equation. There's five things that I think you can do in corrections to not only help alleviate downward pressure, offset downward pressure, but just in terms of better navigation techniques in general. Number one, covered calls. Number two, protected put options. Number three, shorten that time frame. Think about the day trading side of the equation. How much we swing traders complain about volatility, investors complaining about volatility. Day traders love it. Because it opens up time frames, it opens up charts. Charts can live, price moves faster. Number three, you want to reduce your exposure, obviously, but that's not just dumping your stocks. Be strategic. You want to go through that process from a delta weighting perspective. And then number five, and I think that's just a message for the bulls, don't try to pick the low point. Just don't. Just don't try to pick the low point. That's not you being a trader. That's you being a degenerate gambler. Don't try to pick the low point. That's not you being a great investor. That's you being impatient. Don't try to pick the low point. Allow the low point to settle in, and let's go through reversal analysis. Too often times people want to just identify that support level and they're like, I'm going to buy a support. Well, support's confirmed by the market, not whatever you think a technical catalyst is. And so you got to let support get built by the market itself. And so patience is a position. So number one is the cash flow side of the equation. Covered calls are for everybody, every type of trader, every type of investor, every type of trading account. But in these conditions, there is not a better time to write a covered call than in a downtrend against your investment for two reasons. Number one, because volatility goes up, you can generate a higher cash flow. As you generate higher cash flow, you offset loss even more. As you generate higher cash flow, you can compound and dollar cost average much, much, much better in the financial world with using the volatility for your advantage. So the number one is the covered call. And I'll just give you a quick example of that. When you're looking at a stock like KGC, for example, KGC is a stock that a lot of people at Tackle do covered calls on. It's on the Tackle 25 this year. And typically in a normal market environment, you're dealing with 45% implied volatility on KGC. Right now, you're at 71% volatility on the 19-day contract. What that means is I can go further out of the money and get the same cash flow that I could get by going at the money. What that means is I don't have to be aggressive and can still write covered calls and bring that cash flow in. And the second thing that happens as the market is going down is the value of those calls you're selling go down aggressively, not based on theta, but they go down aggressively based on delta, which means you can do 3 to 4 weeks of covered calls within a 2-week downtrend. And you don't have to go too far to
It's a
understand
very
that outside of
underappreciated for people who actively manage covered calls. It's very underappreciated.
is extremely. All of a sudden, you got to wait 4 months to do 4 standardized covered calls. In a bear market, you can do those same 4 covered calls in 1 month. Like that's a beautiful thing. In fact, I would dare say covered call riders would rather ride a downtrend and ride against that downtrend than they would have to constantly roll up and out against an uptrend. Would you agree with that?
Oh, absolutely.
Okay. And so in a short-term downtrend, do covered call investors, do they hate those things? No,
No.
they actually really appreciate them. And then as the market starts to slow down, they get a little bit less aggressive, as we're seeing with KGC, quite frankly. And so that's number one. The covered call is the go-to to mitigate downward pressure in a correction. Absolutely 100%. Without them, things become chaotic and crazy. With them, you smooth out the volatility and you can go your job as a trader and investor. Number two is to buy protected put options, and oftentimes done in conjunction with the covered call itself. And that strategy is called a collar trade. So let's say you're looking at KGC here, Mark, and you say, okay, I got an investment, and let's just say it's 100 shares of KGC. Well, that investment, the truth of the profit P&L column lies on a risk graph. As the stock goes up, you make money. As the stock goes down, you lose money. Well, when you write a covered call, and let's just go to that 19-day contract, when you write a covered call, what will happen is it will flatline the risk graph and offset the loss to the downside. But you still have a vertical downside risk graph. To offset that, you can take that cash flow that you brought in from the sell of the call option and you can go and you can buy yourself a put option with it. And when you do that, it flatlines the left-hand side of the risk graph as well, which means you have now learned how to protect your investment, but you've used other people's money. And the most famous person to do that was Mark Cuban in that 1990s when he sold broadcast.com to Yahoo, had to buy Yahoo shares, was contractually obligated to hold Yahoo. Yahoo went from 95 down to $13 a share. Cuban didn't lose on any money because he wrote covered calls, used the cash flow to buy put options to collar the investment. And that's what a collar does. Do you have any thoughts on the protected put or the
No,
collar?
and especially, and this is one of the things with technical analysis that, there are key points in a chart, right? Where you rally into the falling nine and then give out a key intraday support level where you're like, oh, there's a lot of room to go to the downside. Or you break a key support level where you are going to want to add through your technical knowledge, right? Without having a huge, massive opinion on all the military and geopolitical, just from a technical perspective, being
It's
like,
technical.
that's a key support level. There's a lot of room to run to the next. And then you break out some of the heavier machinery from your arsenal.
Well, and that heavier machinery is kind of point three for me because once you got things, and I've described this the last 4 or 5 weeks to tackle. I've described this as a complicated environment, but really simple if you understand two things. Number one, this is an environment to use volatility to lock down risk graphs and write cover calls against those longer term assets. Number two, while we lock risk graphs down on the longer term side, number two is to shorten that time frame down and learn how to day trade and learn how to take advantage of that volatility on the intraday side of the equation, Mark. And that's a go-to for me because in an environment where you have this type of chop, big upward on Monday, big down throughout the rest of the week, all trading becomes difficult from a swing trading perspective. It just does. Volatility expands, which means every stop is at risk with volatility expanding. You put a stop loss of 5% ATR underneath the low point or above the high point, that is not the standard stop loss you think it is, given the fact that price is expanding its movement. You put a stop loss 1 ATR away. Well, if that 1 ATR expands, your stop loss isn't where it needs to be, which becomes difficult. You know what's not difficult? The intraday side of the equation. It can be choppy at times, there's no doubt about that. But Mark, you catch one of these trades on the downside in the futures market, you're offsetting a lot of craziness in that portfolio. And that's where trends live. Trends are not living on daily charts right now. Trends are living on intraday charts right now. So learning how to lower that time frame and still be able to go to the market and do the things that you were trained to do from a technical perspective, vitally, vitally important for me, vitally important for other traders as well. That's what I mean by point three. Thoughts?
Yeah, no, this is one of the things I think, actually, and this includes the next few things, because, you know, this is one of the things that I think you've done so well in helping navigate and guide the community. Because, when volatility strikes, a lot of traders, they think of just, oh my goodness, I need to get out of my investments, or I need to sell a cover call, or maybe they have some basic knowledge. Number three for me is mindset, and this applies to the other ones as well that we're going to discuss in this list, is that it's not just the X's and O's of strategic. It is going to what works in the market. What is working, right? Certain things don't work. Don't do those. Certain things are a lot more able to work. Do those, right? And I think that's as much mindset as it is actual technical
Well, and that's
knowledge.
also having the ability, instead of a one-trick pony, having the ability to switch time frames, having the ability to offset with cash flow strategies. I consider myself a directional trader, but that doesn't mean I don't fully embrace cash flow. as well. There's nothing that says you have to pick between delta and theta. There's nothing that says you have to pick whether you're a lazy day trader or an aggressive swing trader. There's a lot of commonality in the two. And if any one of these points that we're talking about that confuse you, that you don't understand how to do that, come to the Traders Lounge at Tackle Trading every single day. Truly, I promise you, just sitting at a fly on the wall, listening to those conversations is going to help you immensely as a trader and an investor. And so, yeah, to me, like everybody, the number one question on everybody's mind is when does the market find a bottom? I think that's the number one question
Yep.
on everybody's
Because
mind.
it will. We
Well,
all
and,
know
and,
it
and it
will.
does, and it will this time too.
Hey, in 1929, it found a bottom.
Just a
Like
lot lower than the current price it did,
you know,
but it did find a bottom. But until it does, like you don't have to try to pick the bottom. Not when you can offset with covered calls, not when you can drive it down into an intraday conversation until the bottom is put in. And while that does that, step four is kind of that mindset shift as well. You have to start thinking about your portfolio as an entity in and of itself, that it's not just some random collections of things that you have acquired over time, but there is intention behind it. There is strategy, there is philosophy, there is intention behind everything you do in a portfolio. And one of the ways that you learn how to balance a portfolio in these conditions is through what's called delta weighting a portfolio. And when you delta weight a portfolio, and you go through the actual math behind that portfolio, well, you're going to realize very quickly that you're probably too aggressive in the market right now. In fact, I've talked to a lot of traders in the last just 3 weeks individually that have been, seeking me out and asking me my opinion on certain things. I'm like, well, what's your portfolio weight right now? I'm neutral, and I'm like, all right, let's go through things. And when I'm going through things, I'm like, you're not neutral.
you're not neutral.
You're aggressively bullish right now. And they're like, how am I aggressively bullish? I got staples and utilities and I'm
You
like,
have risk
it's a
assets, bro.
delta of one. In times of concern and volatility, everything goes to a delta and beta of one. That's not what I'm talking about. Delta weighting is how you offset your bullishness in the portfolio. And so let's say, Mark, you have $100,000 portfolio, for example, and you're asking yourself a question: how bullish is my portfolio? Well, if after weighting it to the spiders and you have 1,000 delta in your portfolio, you're very bullish. And Mark, I can't tell you how many times I've talked to people, not just in the last 4 weeks, but during the tariffs last year, during the 22 inflation-induced bear market, during the 2020 pandemic. I can't tell you how many times I've taught or coached people, or people have sought me out to get a read on their portfolio, because they never call me and ask me to get a read on their portfolio when the market's screaming bullish, because they all think they're geniuses. But when the markets turn, they're like, oh my goodness, what's going on? Why am I taking so much else? Why am I taking so much else? And they're like, Matt, can you kind of look at this? And I'm like, yeah, you got the same problem today that you had last year, but you were just making money and you didn't recognize the problem because you were just making money and too quick to pat yourself on the back instead of trying to learn how to actually do this. The problem is you have too much bullishness in your portfolio. And again, they'll sit there and say, no, I don't. I'm like, but you have 20 investments. None of them are covered. Yeah, but what about this? I have gold. I'm like, what, you think gold doesn't go down when markets get concerned? Look at the correlation status of gold versus the ES. Oh, but I have utilities. Oh, seriously, guys? Oh, but I have staples. This is not 1975. Let's adjust. How do you adjust? Write a covered call. You can offset 40% of your delta risk right there just by writing a covered call. You had a put option. All of a sudden, you're delta neutral against that portfolio. The problem is your delta. It's not your investments. It's the net delta you're carrying against the condition. Right now, our ranking of the S&P 500 suggests that if you have a $100,000 portfolio, you should be carrying some degree of a 0 to a negative 100 delta. That's what our rankings suggest right now. We're at negative 45 in the market. Negative 45 is the neutral to slightly bearish ranking. Your portfolio should reflect a neutral to slightly bearish condition right now. And if it's not, it's not that you have too many investments, it's that you have too many investments that aren't covered and aren't protected right now.
Yeah, absolutely. And this is like, in understanding ways to mitigate, it's not just about the X's and O's of cover calls or buying puts. It is about portfolio
All
management.
of
It's
that
about
leads
shifting
to
to
the
what's working.
delta within your portfolio.
Yeah. And,
Yeah.
and then number 5, which is probably my favorite.
This is just a message of mine to the community right now. The single best buying opportunity of the year usually comes after a correction. And the problem for most people is they try to pick the bottom so often in a correction that they don't keep their powder dry, and they're basically they're done. They got smoked on the first pivot, the second pivot, the third pivot, and by the time this correction saga is over, the powder's not dry, it's wet, it's gone. So my message, keep the powder dry. Patience is a position. Don't fight the volatility. When the market is done selling, it will tell us. And as a technician, we'll be able to see that. The market is not done selling yet. Could that happen this week? Could it happen next week? Could it happen 6 months from now? Here's the beautiful thing. It doesn't matter if it happens today or in a week from now or in a month from now. Because if you understand point one, covered calls, if you understand point four, delta neutrality, and if you understand point three, how to offset through intraday analysis, who cares when the low point's put in? You're going to cash flow compound, use volatility, keep that delta consistent against what the market tells us to. And when the market is ready to reverse, we'll be ready with that. And so it's like too often times people are like, oh, please find a bottom this week. Please find a bottom this week. If you're begging the market to find a bottom this week, it's because you're not structured going into this weekend the way you should have been. And right now, that suggests some degree of neutral delta with a cash flow, a positive theta, and focusing on the intraday side of the equation until we see a bottom form. And once again, I can go back. I've talked about this a lot in this podcast. I talk about it every day at Tackle Trading. When that bottom forms, we'll see it through the slowing momentum. We'll see it through support built, and we'll see it through a breaking of resistance and a violation of pattern. Those things are very telling to technicians, and it just so happens that I am that technician that navigates for the community every single day.
Yeah, absolutely. Well done. Great list. Great conversation. And come join us. Matt does a fantastic job guiding this community in the Traders Lounge. I know even when I can't attend, I catch the recording to catch, the main points of emphasis, because these tricky environments, they require, sometimes some seasoned voices to help us. It's a fantastic community. Come give us a shot. Matt, I have enjoyed this conversation, right? It's not been the most like, oh my gosh, but it's been a needed conversation. You
Yes, I
cannot,
can't wait to do the oh my gosh. I'll do that in a double bottom reversal of the S&P. I'll definitely oh my gosh this one. I
you
will do an oh my
cannot,
gosh 50 times in this
you
podcast
do
when that
not get
happens.
to pick the markets you trade. You only get
Coach
the
Frank
markets
says
you
it
have.
all the time. Don't complain about the market you have, trade the market you have.
Yeah, and that is how you navigate this and every other market. And this market just requires, extra caution right now. So, Matt, enjoyed the podcast. Send us out, brother.
Yeah, if you enjoy the podcast, I certainly do. And I do look forward to an environment where we do not have to discuss a little bit of politics in our market focus. But like I said, you don't get to pick the environment. You just get to do something about it. But if you're looking for a community to call home, a trading community of like-minded traders and investors all helping each other out, we do it every single day at Tackle Trading, ladies and gentlemen. We break down the market activity in the Traders Lounge. We cover all that every single day, intraday levels, daily levels, weekly levels, you name it. We talk trading every single day in that Traders Lounge. And every night we do educational moments because at Tackle Trading, we believe in two things: education plus application is the key to success. It's not one or the other. It's a combination of them both. And we help we help our traders achieve both of those every single day, week, month, quarter, year, rain, sun, winter, spring, doesn't matter to us. Massive trade war, real war, tariffs, you name it. We like to have those conversations every single day. And so come join us. I promise you, you're going to learn a tremendous amount about the market, about economics, about all aspects of why things work in the market the way they do. And you know what? Have a tremendous amount of fun doing that. And you can sign up for a free trial of the Tackle Trading Pro account at Tackle Trading, at the storefront at Tackle Trading, or you can hit the link in the description below. And with that said, I hope everybody has a wonderful, wonderful, and blessed week. Hit us up in the comment section if you have any questions or have any comments. Please join the conversation, and we'll see you next time in the Trading Justice Podcast.
Have a great week, everyone.